Okay. And then from there, we move on to April. So what did we do in April? In April, we sold. How many items? We sold 8 items at now the new average cost, which is 32. 8 at 32. So the remaining will be how many? There will only be 12 units. 20 minus 8 will give you 12 units at the price of 32. Because we did not buy, we do not have to calculate a new average cost. Do you understand? The average cost remains the same because we did not buy. So the remaining balance will be 12 at 32, which will give us 384. Do you understand?
Yes, I do.
And then we move on to September. So what did we do in September? We bought 20 units at the price of 40. So because we bought, the rule says we should calculate our new average cost because we bought.
Yes.
So calculating our new average cost, we have 384 of the units that were already in stock, of the 12 units that were already in stock, plus the 800 of the 20 units that we currently bought.
Yes.
So together we'll have 1,184 total cost. We have 12 units from the previous month, or let me do it 12 plus 20 that were bought, ne? So we have 12 units from the previous month plus the 20 that were bought recently. So together you have 30 units, ne?
Yes.
So 1,184 divided by 30 units will give you 37. So 37 is your new average cost. And that is the average cost that you will use, your new average cost that you'll be using. So how many total units you have? It's 12 plus 20. So obviously you have 32 units at a price of 37. So your total cost will be 1,184.
Yes.
You understand?
Yes, I do.
And then you move on to December. So in December, we did not receive, but we sold. How many units? We sold 12 units. So out of the 34 units, we sold 12 units at the price of 37. So how much will be remaining? 32 minus 12 will give us 20 units at the price of 37. And then our total cost or our closing stock will be 740. Do you understand?
I do.
So the only thing that you need to know is whenever you buy, you need to calculate your new average cost. And make sure you add up your items together always. And to calculate your total cost, make sure that you take the balance, the total cost from the previous month, plus your new total cost of the goods that you recently bought. That will give you the whole total cost of the items you have. Do you understand?
I do understand.
Huh?
I do understand. It's just, yeah.
Okay.
I do understand.
Uh-huh.
No, I'm saying it was just the first part that I missed, but yeah.
Oh, now you understand, right?
Yes, I do.
Okay. So we move on to the other part that I remembered I didn't forgot to teach you yesterday, the other day. So the other part is calculating your sales amount, because you can be asked to calculate your sales amount, eh? Now calculating your sales amount, that's where your selling price comes in. Remember I told you that we do not use selling prices in this in the tables, right?
Yes.
Now that's when your selling price comes in that you are given. The selling price that you are given in the activity. So you have 8. You are told that in April you sold 8 units at the price of 46 Namibian dollars. And then in December you sold 12 at the price of 56 Namibian dollars, right? So that's if you're asked to calculate your sales amount, that's when your selling prices will come in. So 8 times 46 plus 12 times 56 will give you your total sales. So what you need is you need to find your sales of all the units that you sold. So first you sold 8 units and each of them cost 46. So what is your total sales of this? So it's 8 times 46 and then you add the sales of the 12 units. Then you get your total sales amount. Do you understand?
Yes, I do.
Do you understand?
Yes, I do.
Okay. And then when you're asked to calculate your purchases amount, you go to the received or to the bought column, ne? So you calculate your total cost of all the items that you bought. You know that you bought 10 items at the price of 30, and then you bought 10 items at the price of 34, and then 20 items at the price of 40. So you just add them together, you find your total cost. So 10 times 30, 10 times 34, and 20 times 40. Then you get your total purchases amount.
Okay.
Do you understand?
Yes.
Hello?
Yes, I understand.
Okay. And then you get your purchases amount. And then from there, you can be asked to draw up a trading account. That's another question you can be asked to draw up. And now a trading account is the first part of your income statement, which is sales less cost of sales equals to gross profit. That is a trading account. So the first part of your income statement, which ends at gross profit, is a trading account. So when you're asked to draw up your trading account, you will have now the sales amount that you calculated, 1040. You less your cost of sales. Now you have to calculate your cost of sales. You have opening inventory, you add your purchases that you calculated, and then you subtract your closing inventory. Now with your opening inventory, with your opening stock, you can only have opening stock if you are given a balance at the beginning of the period. Now, with these examples that we did not have any balance brought down, remember? That's why your opening inventory is 0. So you can only have opening inventory when you are given a balance. And then from there, you add your purchases amount that you just calculated. Then you subtract your closing inventory. Now with closing inventory, you will always be told that either to draw up a trading account using FIFO. If you are told to draw up a trading account using FIFO, then obviously you will use the closing inventory of FIFO. The one, just hold on. You will use the closing inventory of FIFO, which is 800. If you're asked to draw up a trading account using LIFO, then your closing stock will be 688. And if you're asked to draw up a trading account using Accou, then your closing stock will be 740. So that is the difference between all the trading accounts. Only the closing stock, which makes all the trading accounts in all the 3 methods different. So in this case, it was trading account using FIFO. That's why our closing inventory is 800. So 1440 minus 800 will give us a cost of sales of 640. And then sales less cost of sales will give us gross profit of 400. Do you understand?
Can you please repeat how did you get the sales again?
Okay, the sales amount, if you go to the activity name,
Yes.
can you see the sales? The activity, can you see the bought and sales?
Where? Yeah.
Are you at the activity? Can you where it's written sold?
Yesterday.
Pardon?
The one that we did yesterday, right?
Yes. Yeah, the one that we did yesterday.
Mm.
Can you see sold and issued? The sold part.
Yes, I can see the sales part.
Okay. So you are told that you sold 8 items at the price of 46 Namibian dollars. So each unit you sold it at 46 Namibian dollars, right?
Yes.
And we said that the 46 and 56 are the selling price. Those are selling prices, and we do not use them in the table.
Mm.
But when you're asked to calculate our sales amount, that's when we use them. We only use them to calculate our sales amount. Now you are told that you bought 8 at the price of 46. So 8 times 46 plus 12 times 56. Those were your only sales that you made. So 8 times 46 plus 12 times 56, then you get your sales amount.
Okay.
Do you understand?
I'm a bit lost.
Do you understand?
I'm a bit lost. Um,
Okay. Okay. You are going in a shop, ne?
mm,
Or let me say, okay, you are going, no, not in a shop. Okay, you sell shoes. You understand?
mm-hmm,
So you are told that in April
mm,
you sold 8 pairs of shoes
mm,
at the price of 46 Namibian dollars. So your selling price was 46.
mm-hmm,
So how much did you get in total? What was your total sales? If one pair of shoes is 46 and you had 8 pairs of shoes,
mm.
so your sales, how much did you make out of those 8? So it's 8 times 46, right?
Yes, which is 368.
Which is 368.
68. Mm,
Okay. And then in December again, you sold
mm-hmm,
12 pairs of shoes
mm,
at the price of 56. So meaning that each pair of shoes
mm,
is 56 Namibian dollars. So how much sales did you make?
mm.
12 times 56. How much income did you make?
In 672.
672. So if you add those two sales amounts together, then you get your total sales
Mm,
for the year.
yes.
Do you understand?
Mm.
Do you understand, or are you still confused?
No, 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 I understand now.
Okay, and that's how you calculate your sales amount when you're asked to.
Okay.
Any other questions?
It's fine.
Okay,
Mm.
so that was it of inventory valuations.
Mm-hmm.
So we are starting off with a bank reconciliation. So remember, we still have a session at 4:30, right?
Yes.
Yeah. So what you're gonna do is we are starting off with bank reconciliation. So I will
Mm-hmm.
explain the bank reconciliation now, and then
Mm-hmm.
we'll do an exercise together at
Mm-hmm.
4:30.
Okay.
Okay. So bank reconciliation.
Mm-hmm.
So a bank reconciliation happens, or it's a situation where, or it's prepared when your cash book is
Mm.
not corresponding, your cash book amount is not corresponding with the amount that is on your bank statement.
Mm-hmm.
Meaning that, remember, you as a business, you keep a cash book, right? To record all
Mm-hmm.
money received and money paid out.
Mm-hmm.
Now you have a bank column in your cash book.
Mm-hmm.
Now that bank column, you record all the deposits made into your bank account, so you record them in under your bank column in your cash book. And then also all checks received, that's where you record them. And all bank transfers or check paid out, you record them in your cash book as well on the credit side, ne?
Mm-hmm.
Okay. Now, after balancing of your cash book, it says that after balancing of your cash book, it says that the amount, the balance brought down that you get in your cash book should be the same as the real balance that is in on your bank account.
Okay.
So every month end,
Mm-hmm.
the bank gives you your bank statement, sends you your bank statement. So now at the end of the month, at the end of each and every at the end of every month, you need to match, you need to match your bank, your what, your bank statement. You need to compare your bank statement with your cash book.
Yes.
Now, in cases where those balances are not the same, because they need to be the same. Now, in cases where those balances are not the same, then you will need to reconcile them. You understand?
Yes.
You will need to reconcile those balances to make sure that they are the same.
Mm.
Now, to reconcile those balances, you will need to draw up an updated cash book as well as a bank reconciliation statement.
Mm-hmm.
Okay, so it says the bank reconciliation statements, the cash book and bank statement is used to reconcile transactions of the business. When a
Mm-hmm.
business makes and receives payments, the business keeps all its records by drawing up a cash book that consists of all receipts side and payments of the business.
Mm.
Now, the cash book is manually prepared by the business.
Mm-hmm.
On the other hand, the bank also keeps records of what happens with our bank account. When we
Mm.
deposit money, our bank account receives the money, and when we make payments through checks, the bank deducts it from our bank account.
Mm.
So as for us, we keep all transactions, we record all transactions manually in our cash book, while the bank also records transactions. Ne? When we
Mm-hmm.
deposit money, the bank records. When we make check payments, the bank records and
Mm-hmm.
deduct money from our bank account.
Mm.
Okay. Now we want to compare or reconcile the statement from the bank and the cash book that is prepared manually. So at the end of
Mm.
each and every month, the bank will send you your bank statement. Then you
Mm-hmm.
will now have to compare it with your cash book because the amounts need to be the same. If you have a
Mm.
5,000 on your bank statement, then you should also have a 5,000 in your cash book.
Yes.
Okay. One on one hand, cash book, and the other hand, a statement from the bank.
Mm.
Now, know that some of our clients pay directly into the bank account, and that might leave us not recording such payments in our manual cash book. Now, let me
Mm-hmm.
say I was owing you money, ne?
Mm.
So what I did is I just went straight to the bank and deposit the amount that I owe you. But I never called you or sent you the proof of payment. Maybe I
Mm-hmm.
totally just forgot. What I did is I just went to the bank and deposit the money, but I never sent you the proof of payment. Do you understand? So because
Yes.
I did not send you the proof of payment, you wouldn't know whether I settled
Paid.
my account. Do you understand?
Mm.
So you won't even record the transaction in your cash book because you do not know whether I paid off my account.
Yes.
So such a transaction whereby a client pays directly into the bank account can be
Mm.
omitted in the cash book, cannot be like can be omitted in the cash book because
Yes.
we don't know, the business does not know whether they received a payment from their client. Do you understand?
Mm.
That's why such a recording such a transaction may not be recorded, may not appear in the manual cash book. Again, some payments received manually might not be deposited into the bank account by the time we request for a bank statement. Now, what does this mean? This simply means that we receive, now I owe you, right? You have a business. So what I did is I brought a check to you. I brought you a check for my payment. Now I gave you a check, and then you recorded in your cash book that, okay, our bank increased because of the check that we received. You understand? But you never went to the bank before, like it says, by the time the bank sent you your bank statement, you still did not go to the bank and deposit that check or cash out that check. Do you understand?
Yeah. Yes.
Let me say I gave you that check on the 30th. On the 30th of October, and your bank statement was sent immediately at 12 on the 31. You understand? So you did not get time to go to the bank and deposit that check. So it won't be appearing on your bank statement, but yet you recorded it on your cash book that your bank has increased. But because you never went to the bank, by the time you received your bank statement, you still did not go to the bank and deposit the check. And therefore, it will not appear in the bank statement because the bank is not aware whether you received a check.
Yes.
Do you understand?
Yes, I do.
So that can be another reason why why the two statements, or why the statement and the cash book are not corresponding. And then it says that is why there might be differences in our reconciliation or in our statements. For example, okay, another example that they did not put here, another reason why the two will not balance is that we gave out a check. Now you have a business, right?
Yes.
So what you did is you were owing Game, your supplier, one of your suppliers maybe is Game. You buy your stuff from Game. So you decided to give them a check. So you decided to give Game a check. Do you understand? So on the 30th, you gave Game a check. Then you recorded in your cash book that, okay, my bank account has decreased with a 500 check that I gave to Game. Now, but because Game, by the time you got your bank statement on the 31st, Game, your creditor did not go to the bank and cash out that check. So the bank still does not know whether you gave out a check.
Yes.
And therefore, that transaction, that amount will not appear on your bank statement.
Yes.
Okay. And then another difference is a dishonored check. So you received a check to I gave you a check. Remember, I'm your customer. I gave you a check. So I gave it on time, maybe on the 20th or so. So you went to the bank and deposited that check. Now it happened to be that I probably made a mistake when I was busy drawing up that check, or maybe I do not have money. I have insufficient funds in my account. You understand? So the bank would not deduct money from my account. So it's either the way I wrote the check, there was a mistake in the check, or maybe I have insufficient funds in my account. Therefore, the bank would not deduct money from my account and deposit it into your account. Do you understand?
Yes.
Now, in that case, the check will be dishonored.
Mm-hmm.
But the bank will never call you saying that, okay, Justin, the check that you sent us is dishonored. You understand?
Mm-hmm.
The check that you deposited was dishonored. They won't tell you. They will just put it on they'll just show it on the bank statement. Now, because you are not aware of whether the check was dishonored,
Mm-hmm.
you still have the recording of saying that, okay, no, I received a check. Ne? I received a check of $1,000 from Sarah. So it's still appearing in your cash book. But because it was dishonored, you will need to record, you will need to adjust your cash book, you will need to subtract that check that you received. You say on the debit side of your cash book, you wrote that you received $1,000. So you have to take it out, you have to cancel that $1,000 out to show that, okay,
Okay.
no, you did not receive, your bank account did not receive because the check was dishonored. Do you understand?
Yes.
So that can be another reason why the two the statement and the bank and the cash book are not balancing.
Mm.
Okay, and then we move on. Another other transactions are such as bank charges. So whenever you make little transactions, when you make transfers, the bank charges, you know all the bank charges, ne?
Mm-hmm.
So the bank will never call you and tell you that, oh, okay, Justin, no, we charged your account with bank charges. They won't.
Mm.
It will only appear on the bank statement. Now, because you do not know of how the charges, the total amount of charges, you wouldn't record it in your cash book. It won't be appearing in your cash book.
Mm-hmm.
You will only get to see it on your bank statement that, okay, no, there are bank charges of 500 on my account. So that can be another reason why the two statements won't balance.
Yes.
Okay, so let's move on to the example. So here you are given a cash book, ne?
Mm-hmm.
And you are given a bank statement.
Mm-hmm.
Cash book and bank statement. And you are told that other the what? The exercise continues.
Mm-hmm.
10,625 and 10,626 refers to the serial numbers on checks paid out. Also, these are serial numbers.
Mm-hmm.
Let me just make sure. Yeah, the serial numbers of 10,000, these ones, ne? These ones are just
Yes.
numbers. So instead of writing the names, they only wrote serial numbers, ne? So don't get confused with
Okay.
that.
Mm-hmm.
They're actually supposed to write the name of the person. It's now, it's now, it's now also possible to see that the two items not shown in our cash book are okay. So now that you are given your cash book and you are given your
Mm-hmm.
bank statement, ne?
Yes.
Now the first thing that you need to do, you compare them. Now please take a pen. I want so you note down what I'm about to tell you now.
Okay.
So
Um,
it says that your debit side of your cash book,
mm-hmm.
the debit side of your cash book is the same as the credit side of your bank statement.
Just hold on it. The debit side of the cash book.
The debit side of a cash book is the same as the credit side of a bank statement.
Okay.
Ne?
Mm-hmm.
That's why, ne? So when you receive money, you record them on the cash book. And
Mm-hmm.
then in your bank account, when you receive money, what notification do you get? Your bank was
Credit.
your account was
Credited.
credited. You understand?
Mm-hmm.
Meaning
Mm-hmm.
money was deposited into your account. That's why in a cash book you record it on the bank or on the debit side that, okay, no, I received money, my account increases on the debit side, I should debit it. But then with the bank statement, when you receive money, your account is credited. That's why the bank the debit side of your cash book should be the same or is the same as the credit side of your bank statement. And then the
Yes.
credit side of your cash book, the credit side
Mm.
of your cash book is the same as the debit side of your cash book. Of your
Okay.
bank statement. So the credit side of your cash book is the same as the debit side of your bank statement.
Okay.
So that's why when you pay out money, when your bank decreases in the cash book, you recorded that, okay, no, I gave Hendrik a check, so my bank account has decreased on the credit side. But then when money is withdrawn out of your bank account, the notification that you get is your account has been debited with. Then you know that, okay, no, money was withdrawn out of my account. Do you understand?
Yes.
That's why the credit side of your cash book is the same as the debit side of your bank statement. So now you start comparing, and when you compare, you ignore the balances. You do not compare the balances, you only compare the figures, or you only compare the transactions. You understand?
Mhm. Yes.
Okay, now let's start comparing. We start off with our cash book on the debit side and on the bank statement or credit side. So we
Mm-hmm.
have 100 of P Thomas, ne? So we have
Mm-hmm.
$100 in our cash book. We have $100 in our bank statement, ne?
Mm-hmm.
We have $190 in our cash book, and we also have 190.
With the
We
bank
also have
statement.
190 in our bank statement. Do you understand?
Yes.
Okay. Now looking at this, we have a $70 in our
Mm-hmm.
bank statement, but it is not appearing in the cash book, ne?
Mm-hmm.
So we'll need to update our cash book by adding that $70. Do you
Mm-hmm.
understand? Hello?
Sorry, just repeat that. Just repeat that.
Okay, so I was saying that we have a $70
Yes.
on the credit side of our bank statement,
Yes.
but this $70 is not appearing in the cash book. Ne?
Yes.
So
Mm-hmm.
we'll need to update our cash book by adding that $70, by debiting that $70. It should also appear in the cash book as $70. You understand?
That's good. Yes.
So under details, you have P Smith. So under
Mm-hmm.
details there, you have P Smith and then
Mm-hmm.
$70. You
Okay.
understand?
Yes.
And then from there, we compare our credit side of our cash book and the
Mm-hmm.
debit side of our bank statement. So we
Mm-hmm.
have 65 in our cash book, 65 in our bank statement, so it's fine. We have 175, we have 175, so it's fine. We have $50 in our bank statement, but we do not have it in our cash book. Do you understand?
Mm-hmm.
Which are even the bank charges. We say that bank charges, you only get to know of the bank charges when you get your bank statement. So what you need is
Mm-hmm.
you need to record them back to your cash book. You need to update your cash book. Do you understand?
Mm-hmm.
So on the credit side, you have bank charges of $50.
Mm-hmm.
Bank charges decreases your bank. Money is being charged, the charges. So your cash book is
Yes.
decreasing. Your bank account is decreasing on the credit side of your cash book. Do you understand?
Okay.
Okay. Another thing that I want to tell you is, if you can write it down,
Mm-hmm.
the amounts appearing on the debit side of your cash book,
Mm-hmm.
the amounts appearing on the debit side of your cash book, but they are not appearing on the credit side of your bank statement are known as outstanding deposits.
Okay. Just hold on.
Okay.
But not appearing On the credit side
of the bank
of the
statement
statement.
are known as
Mm-hmm.
outstanding
Outstanding.
deposits.
Okay. Okay, I've got it. Okay.
Are you done?
Yes, I'm done.
The amounts appearing on the credit side of your cash book but not appearing on the debit side of your bank statement are known as unpresented checks.
Mm-hmm. Okay.
Understand?
I've got it. Yes.
Okay. So that is that will help you. It always helps when you are to draw up your bank reconciliation statement. Then you will know that okay, these amounts are the ones that are outstanding deposits and these ones are the unpresented checks. Now, for example, you are told that okay, it now also possible to see that the two items not shown in our cash book are the $70 from P Smith and the bank charges of $50. So P Smith paid us $70, but instead of sending us a check or a proof, I think they meant proof here, not check. But instead of sending us a proof, he decided to pay through the bank transfer. Or instead of sending us a check, he decided to pay through a bank transfer. And we did not know this until when we received a bank statement.
Yes.
And then the bank also charged us $50 for keeping our services. That's why these two amounts are not appearing in the cash book. We were not aware. Because of
Yes.
what was missing in our cash book, we have to draw up an updated cash book. Ne? So we'll need to draw up an updated cash book. Now compare cash book. Now it says that first you compare the cash book with your bank statement. Then you take notes of the goods not in the cash book but appears on the bank statement. And then from there, that's when you update. After you take note of all the items appearing on the bank statement but not in the cash book, then you update your cash book. You understand?
Yes.
So what if it's like this item in the cash book but not in the bank statement? So we said that items that are appearing on the bank statement but not in the cash book are added back to the cash book by drawing up an updated cash book, right? So we update our cash book. Now what happens if there are items that are appearing in the cash book but not on the bank statement? Then we'll need to draw up a reconciliation statement or a bank reconciliation statement. You understand?
Yes.
Okay. So the cash book balance was maybe $50 while the bank shown a balance of okay. To prove that although the balances are different, they can be reconciled. A bank reconciliation statement is prepared. So there are two methods. There are two methods there. And I actually love using the first method.
Okay.
But they are so you have balances per bank statement. You less all unpresented checks.
Yes.
You add outstanding deposits. And then what you get is your balance per cash book. Now the balance as per cash book that you get should be the same balance as per cash book of your updated cash book.
Okay.
You'll see when you're going to do an exercise together. So balance as per bank statement, but I prefer writing it as balance as per bank statement. You add outstanding deposits, you subtract your unpresented checks, but however, whatever way you write it is correct, ne? And then what you get is your balance as per cash book.
Okay.
So this is the format I love using, and it's very simple, very easy. Or you can, there's also another format which is, it's vice versa. Now these ones are starting from down, which is balance as per cash book. You add unpresented checks, you subtract your outstanding deposits, and then you get your balance as per bank statement.
Okay. I think
I find this one a bit confusing. That's why I love sticking to the first one.
Yes.
Ne? So I love sticking to the first one, and yeah, if you find that the first one is easy, then you can always stick to the first one, which is balances for bank statement. You add outstanding deposits, you less unpresented checks, and then you get your balance as per cash book that you calculated in your updated cash book. You understand?
Yes.
So what happens if your cash book has an overdraft? Christian, right? Okay. What happens if your cash book has an overdraft? If your bank has an overdraft, so you have overdraft as per bank statement, ne? You add unpresented. Now it's vice versa. When it's a favorable, when you have money in your bank account, meaning it's a favorable bank account, bank balance. So you have balance as per bank statement. You add outstanding deposits, right? But because it's an overdraft, you add unpresented checks, and then you subtract all your outstanding deposits. Then you get your balance as per cash book. You understand?
Yes.
Do you understand?
Yes, I do.
So that's the vice versa. So that was the end of the slides. Unless you have any other questions, and if you do not have questions, we'll do activity in the next session.
Okay. Also, the format you will show us, ne? The reconciliation things.
Yeah. We'll do an activity together. Yeah.
Oh, okay.
So this is the bank reconciliation format, ne?
Yeah.
This is the bank reconciliation format. You just record the amounts and you get, and then the updated cash book will do an exercise together.
Okay.
Yeah. Any other questions?
No, I think it's clear.
Okay, so this session was recorded because since I'm now I managed to send all the slides in my PC, and so I recorded the session.
Oh, awesome.
Yeah. So whenever you need the videos, just let me know.
Yeah, I will need it.
Okay.
Automatic. Yeah.
Okay.
Okay.
Thank you.
Thank you so much.
Mm.
All right.